Hello, and welcome to the Small Business Tax Savings Podcast, powered by Jetro and Associates. Get ready for another action-packed episode from our team that will help you save time, taxes, and keep more money in your pocket.
Hello and welcome back. I am your host, Mike Jesowshek, and I'm a CPA and founder over at Jetro, an innovative accounting firm servicing small business owners across the country. Now, today we're going to be talking about a safe harbor expensing policy or a capitalization policy. There's many kind of different names for it, but just know it as a safe harbor expensing policy. Now, on surface, that might not sound too exciting, but as we dig deeper into this episode, I think you're really going to like what I'm going to be talking about today. So, starting in 2006, the IRS created a new audit-proof option that you can use to improve your tax deductions. And this new option allows you to avoid depreciating certain assets, and instead you simply write them off right away. So I just want to go through a quick example to give you a little breakdown about what we're looking at. Let's say you go to Best Buy and you buy a new $2,000 Apple computer. Under the old rules, you would have to treat that computer as a capital asset and either depreciate it over 5 years or elect Section 179. You then had to carry those items on your books and account for and track for them on your tax return. It was kind of a pain. And then, after that, if you sold an item, let's say after 3 years, you would have to do a recapture of some of that expense that you took. And again, this can really kind of be a real pain and complicate your taxes a little bit. However, with this change that the IRS issued, they allow a safe harbor where you can expense immediately, no capitalizing at all, up to $2,500. So that same Apple computer that you paid $2,000 for would simply be fully expensed and no need to depreciate it or show it as an asset on your financials. And there would also be no recapture issues if you sold this asset within a few years. So this can be extremely attractive on ways that you can get an expense immediately without having to mess around with depreciating and capitalizing these assets. Now, if you want to take advantage of this, there are a few things that need to be done to ensure this. So first, you must put in place an accounting policy that requires expensing of amounts paid, and this is a per item. You must expense items less than $2,500, and you must expense amounts paid for items with useful lives of 12 months or less. So this is a policy that you would put in place that basically says any kind of item that we buy under $2,500 will always be expensed immediately, and we will not do any kind of depreciation on it. Now, the big thing is that you have to stick to that policy. You cannot establish a policy and then some items under $2,500 you expense and others you capitalize. It has to be an all or nothing type of situation, which really, why wouldn't you want to just take that expense all in that first year? The second thing you have to do is put the policy in writing. This can just be something that you keep on file in your office. We do not send it into the IRS or anything like that, but you will want to have a copy of it should there be an IRS audit down the road. Just be sure to type something up and be sure to sign and date it so that there's proof that it was established and put in place at the beginning of the year. The third item is save your invoices, and this should be a no-brainer anyways. But the invoices can be especially useful when you have combined items or multiple items in one payment. So let's say you bought 20 computers at $2,000. The total payment that you made would be $40,000, which of course would be over that $2,500 threshold. But by having the invoice and showing the breakdown of 20 computers at $2,000 to get to that 40, you would be able to take that full expense since each individual item is under that $2,500 threshold. The fourth item that you have to do is you have to make an election on your tax return. So every year that you want to use the safe harbor method, you want to make that election on your tax return. And you do this by simply attaching a statement to your federal tax return when filing, indicating the policy and the tax code number that you're kind of putting in place. So to kind of wrap things up, you want to use this expensing safe harbor method when you can, because one, it's better than Section 179 because you don't have the recapture period, which can really complicate your taxes. Two, there's no depreciation necessary. And three, because of that, it simplifies your tax and business records because you don't have small assets cluttering your books. So it really is kind of a win-win. It's an easy way to just make record keeping easy. And that's one of the main reasons that the IRS put this in place, is that depreciation and all these things like that can be rather confusing, especially for a small business owner. And so the IRS wanted to just make things a little bit more cut and dry, make things a little bit more simple by allowing you to put this safe harbor in. So any item under $2,500 is just expensed immediately without having to jump through all these hoops and defining what your depreciation period is and a lot more confusing things. And so again, to put a safe harbor in place, you need to do four things. You need to, one, have an expense policy in place at the beginning of the year that explains what your policy is. And again, that's just going to be any items that you buy under $2,500 will be expensed immediately. And any items with useful life of less than 12 years, again, would be expensed immediately too. And if you do have questions or want an example of this policy, hit me up in the Facebook group and let me know. I can send you a version of it. So to put a safe harbor in place, you need to do four things. One, have an expense policy in place at the beginning of the year. Put that policy in writing and comply with it. You have to do it for everything. It's an all or nothing. You can't depreciate some under $2,500 and expense others. It's an all or nothing type deal. Keep the invoices that you have. This is going to help back up that expense. And also, if there's multiple items on one payment, it's going to help indicate what that breakdown is. And four, make the annual election to expense on your federal income tax return. So again, this is a no-brainer for a lot of business owners out there. It's something that's really easy to do. It makes your record keeping, your life easier. It makes tax time easier, and you can avoid that recapture. So if you're buying some assets and selling assets, a year later, when you're depreciating, that can get complicated, and there's some tax consequences there. Using this method, we're able to avoid that and just make things simpler. So let me know if you have questions on this or on anything that we talked about in this episode. And again, if you want a sample policy, hit me up in the Facebook group and I can get that over to you. I hope this was helpful for you, and it was great to have you on another episode, and I will see you next week. Now, one last thing before I go. Don't forget to check out our podcast website at www.taxsavingspodcast.com. That's taxsavingspodcast.com. This is a great resource to go and check out our most recent episodes, as well as find extra items if you want to take what we discuss here and dive deeper. Again, also join our Facebook group where we share tons of value, and you have the opportunity to bring situations you are faced with to the table, and we'll help you out in that Facebook group, and other business owners will support you as well. You can join by simply searching in Facebook for the Small Business Tax Secrets group. Again, it's a Facebook group called Small Business Tax Secrets, and there should be a group that pops up that you can join.
This has been another episode of the Small Business Tax Savings Podcast from the team at Jetro and Associates. If you have any questions, feel free to email them. tax@jetrotax.com. We have packages for small business owners starting at just $75 a month. If you enjoyed our podcast, please take the time out to give us a 5-star review in iTunes or wherever you listen. This helps us to bring you useful tips to help you grow your small business. Thanks for listening and have a great day.